Welcome to this video. So in this video I'm going to be sharing the Lfx Nq London model. It's a very powerful model which I've been using for, I could say, the past 3 to 4 months, and I believe by the end of the presentation you'll appreciate the model. So let's get into the video. So I'm going to start with time placement. So for time placement, we're going to look at between 2 a.m. to 5 a.m. EST. Now this is the New York local time, so you can compare with your local time. And this is basically the London session, 2 a.m. to 5 a.m. New York time. That is the EST, which is the New York local time. So you take note of that. So let's jump to top-down analysis. So for top-down analysis, we're going to look at the higher time frame analysis, which is from the H4 time frame to the weekly time frame. So here we just look at a neutral order flow. We are not interested in the daily bias. We're just interested in, approaching, the higher time frame without any bias. So basically it's a neutral order flow. Same thing with the mid-time frame analysis. That is from M15 to H1. You look at the markets, with a neutral order flow. So meaning, in summary, you won't even bother opening your M15 to weekly time frame because it won't be of interest, to us, because it's basically neutral. You don't know where the markets are going to go, so you just have a neutral order flow. So I think that is understood. So the real magic happens on the lower time frame, which is from the 2nd minute to the 5th minute, or even M1 to M5. All these can work very well. So this is where we're going to see the key signatures of the model on the lower time frame. So let's begin. So first of all, we have to confirm if we have a stop run on the previous high or low, or a stop run on the Asian session range high or low. So we are interested in looking for a stop run. So if you can identify a stop run, on these levels here, the previous high or low, or the Asian session range high or low, then that is the first signature that you can, identify on the lower time frame. Now let's jump to this other point here, or signature. So anticipate a 3 a.m. manipulation or distribution, using the criteria below. So 3 a.m. is a key time window. So 3 a.m. is the London Open. So usually at the London Open, we anticipate a level of volatility injection. So at the London Open, you could either, see a manipulation of price or a distribution of price. And how we can anticipate this is what I'm going to, explain. So in point number one, I'm going to try to explain how to identify a manipulation, because if you can anticipate a manipulation or a distribution, then you can be able to, you know, position yourself to be able to participate in the environment. So let's begin with how can we, you know, anticipate a manipulation. So usually before the London Open, before 3 a.m., if we do not see a stop run, then we can anticipate a manipulation, you know, right at the 3 a.m. London Open. So as we can see here, if the previous high or low or the Asian session range high or low is not run, you know, before 3 a.m. So meaning there's no stop run before the London Open. So then there we can anticipate a manipulation. So I'm just going to show you an illustration. Okay, I think this can give you a picture of what I'm trying to, you know, explain. So how can we anticipate a 3 a.m. manipulation, you know? So 3 a.m. is our London Open. So before the London Open, if there is no stop run, you know, if you see no stop run before this London Open, then you can anticipate, you know, that manipulation, which is a stop run, right, you know, after the London Open or right at the London Open. So you can see here, this is my Asian session range low, and that is my Asian session range high. You can see price hasn't, you know, had any manipulation, you know, before the London Open. And now you can notice after, you know, the London Open, you can see now the manipulation happening. So price here basically takes out the Asian session high stroke, or it could be a previous high, you know, before, you know, dropping down. So I think this is a clear explanation regarding that. So I have a few examples here which I, you know, picked out from some of the trades I've previously taken. So this is this was on the 5th of December 2025. So you can notice, you know, we have the Asian session range low here, and then we have the Asian session range high here. And now you can notice price is you know, moving, and you can notice we didn't have any stop run before the 3 a.m. London Open. And now notice after the London Open, you can notice we have a manipulation happening. So basically price, you know, pushed up and you know, took out this previous high, and then after that manipulation, then we can anticipate, you know, a reversal, and that is how I was able to position myself in this trade here. Then I think we have a second example here. This trade was taken on the 2nd of December 2025. You can see 3 a.m., which is my London Open. You can see my Asian session range high, my Asian session range low. So you can see price is approaching my London Open, and it hasn't, you know, had any significant manipulation. So meaning right after my London Open, the manipulation happened here, and you can see after the manipulation we then had a reversal, and I was able to position myself, you know, for long positions, and you can see how it played out there. So this is just a summary of, you know, how to anticipate a manipulation. So the second point is, you know, how can we anticipate a distribution? How can we anticipate a distribution? So for the distribution, it's quite simple. It's the opposite of, you know, the manipulation. So basically, you see a stop run, or if you see a manipulation before the London Open, which is 3 a.m., then meaning you can anticipate a distribution right at the open of the London session, or a few minutes after the 3 a.m. London Open. So these are just the key signatures to anticipate. So maybe I can show an illustration for the distribution. Let me see. So anticipation of a 3 a.m. distribution. So now notice here, that is my Asian session range high, and that is my Asian session range low, or it could be a previous high or low. So you can notice here, price manipulated. So when I say manipulation, meaning there's a stop run. So basically price took out this Asian session range low, which is a manipulation, and this happened before the London Open, which is 3 a.m. So meaning at the London Open we can anticipate a distribution, and you can see price distributing because we already had that manipulation before the 3 a.m. London Open. So I think this makes perfect sense. So below here I have an example of a trade which was executed. So now here you can see this trade was taken on 21st of November 2025. You can see that is my Asian session range low and my Asian session range high. So you can notice before my London Open 3 a.m. you can see price manipulated. It took out my Asian session range low. So meaning at my London Open I can anticipate a distribution. So I was able to execute long positions on this anticipation of the distribution. I think I have a second example here. So here basically price manipulated and took out the Asian session range high. That is a manipulation, and this happened before the London Open, which is at 3 a.m. So meaning my anticipation was a distribution right at the open. So I was able to execute short positions in this distribution here. Yeah, so you can see how understanding this concept can help you position yourself accordingly. So I think I've elaborated on anticipating manipulation or distribution at the London Open, which is at 3 a.m. So let me now jump to this other portion here. So there are a few things we have to check out. I could call it a checklist. So checklist number one is the bias. So for the bias, I'm not interested in the bias. I'm just interested in anticipating how whether we shall have a manipulation or distribution within my time placement or window before the London Open. So here we can confirm the subjective narrative, and you do that by anticipating the manipulation or distribution. Then now we jump to SMT. So here we'd love to confirm an SMT divergency or alignment with US 30 or US 500. So US 500 is the same as S&P 500. So these are very important. SMT or alignment is something which is very important in confirmation. So I'm just going to print this illustration here. So what we can see here is you can see now US 30 stroke US 500. So you can notice here price did not take out this higher high, but on Nasdaq price took out this, this high here. So meaning this confirms, an SMT, right? So meaning on a Nasdaq price took out this high, but on US 30 stroke US 500 price did not take out, this high. So this basically confirms, SMT, and we can look at it as a confirmation, to execute on Nasdaq. So that is something, you have to check out. Then of course, drawn liquidity, you look out for, relative equal highs, to target. That is where you find your liquidity, sell side liquidity, if you're shorting, and then maybe buy side liquidity if you're looking out to buy, to target those, buy stops. Then of course, we shall confirm our entry models on M2 to M5. Yeah, so take note of that. That is very, very important. Now, I want to talk about the midnight opening price. So now, usually, if you're bullish, you want to see price trade below the midnight opening price, so that you can anticipate longs, right? And vice versa for the bearish scenario. If you're bearish, you want to see price manipulate or trade above the midnight opening price. So let me just I think illustrate it using this. So now this illustration it's showing us a bearish scenario. So you can see this is my midnight opening price. So if you're bearish, you want to see price trading above this midnight opening price, as you can see here. Basically price manipulating above this midnight opening price, then you can anticipate price to continue selling down. Then it's the opposite for a bullish scenario. So if you're bullish, you want to see price trading below the midnight opening price. And yeah, I think that wraps up the model. It wraps up the model. So just to summarize, what I've just explained, I've talked about time placement, 2 to 5 a.m. New York time. Then for top-down analysis, higher time frame and mid time frame, we're looking out for a neutral order flow. Then the main attention is on our lower time frame, where we want to confirm if there's a stop run on our previous high or low, or Asian session range high or low. Then of course I've tried to explain, anticipating the manipulation and distribution at the London Open, which is at 3 a.m. Then I've also looked out, I've highlighted the checklists, the bias, SMT, drawn liquidity, and where to get your entry model. And then I've also talked about the midnight opening price and how we want to see price manipulate around those levels there. If you're bullish, you want to see price trade below the midnight opening price, and if you're bearish, you want to see price trade above the midnight opening price. So I think that summarizes the model. This is now like 90% of the model. Now let's talk about change of direction. There are scenarios whereby you can be bullish but then you have to change your bias immediately, due to some price signatures on the markets. So let me just read this out. So now if US 30 or US 500 reach a relative equal higher low before NQ, then you have to switch the bias of NQ. Maybe to illustrate it better, let me bring out an illustration here. So change the direction. Okay. Yeah, I think this will work. So now let me just use this illustration here. So now this diagram on my left, so let me just assume this is a US 30 stroke US 500. And on my right, this is NASDAQ, because now NASDAQ is where we usually execute on the model. So now there's a case whereby, let me say US 30, we have SMT because, Asian low hasn't been taken out on a US 30, but on NASDAQ, the Asian low has been taken out. So meaning this is SMT, as you can see there. This is SMT. But now, and price is also trading below, the midnight opening price. So meaning we're basically bullish, right? But now, on NASDAQ, we want to place long entries, but when you look at US 30, you notice US 30 moves quick to the Asian high or, relative equal highs before, NASDAQ can reach. So when this happens, usually you switch direction, you change direction for NASDAQ. Because if US 30 has already hit this high, meaning there's already an SMT forming right there, because a high has been taken out here, and on NASDAQ it might not likely continue to go to that high there. So meaning we can anticipate a change of direction. So that is how the concept got identified. Now maybe I can illustrate it here. Now here what we see, you can notice on US 30, you can notice Asian low hasn't taken out, so price moves straight to my Asian high. But now when you look at NASDAQ did not reach the Asian high, so meaning we have an SMT, so meaning we just had to change direction. And you can see how NASDAQ, reversed, and dropped, drastically. So that's the concept of change of direction. And I hope it makes sense. And the opposite also, applies, for maybe when you're bullish. So this is the illustration I can explain to you. Now let's go to the final item, which is invalidation. So usually, when should I invalidate my session? So if you don't have a stop run, invalidate that session there. Without a stop run, there's no confirmation, right? You can look at this, imagine, you open your markets and US 30, there's no stop run. US 500, there's no stop run. NASDAQ, there's no stop run. I cannot participate in this, market. I wouldn't want to place a sell entry on NASDAQ. I would, call it a day, because I would be exposing, my capital. So take note of that. Then the final invalidation criteria is if we have a double page, invalidate. So I'm just going to illustrate that here. Let me illustrate it here. double page. So now there are cases whereby, before the London Open of 3 a.m., price takes out the Asian low, and then again also price takes out the Asian high before 3 a.m. Here you wouldn't want to participate because you'd be gambling, right? Asian low taken out, Asian high taken out. So what are you doing here? So I would invalidate this this setup here. So take note of that. You can see the illustration. I think this was on the 17th. Yeah, 17th of December. You can see price took out the Asian low. Then again, it fueled the Asian high. So here you wouldn't be comfortable. So usually such kind of environments I would invalidate such a setup. So you can take note of that. And I think this wraps up the model, the NQ London model. And yeah, for understanding you can maybe rewatch what I've tried to explain, and yeah, I believe it will make sense to you. Yeah, so there are other things that I would love to point out. Entry models, order blocks, fair value gaps, mitigation blocks, breakup blocks, inversion fair value gaps, etc. So these are where my entries are placed on the lower time frame. Then also NFP, CPI, FOMC, and US bank holidays. Take the day off. You don't have to be on the markets all the time. So take the day off. Then of course aim for 1.5 to 2 risk reward. Then 1 trade per day, and yeah, you should learn to take partials. I usually take out 20% off when price breaks a significant low high, depending on my setup. So take out partials, and then these are some of the risk management parameters I use. You can look through that. You can pause the video and look through that. For challenge accounts and for funded accounts, you can look at that. So I'm going to now so there's some data I have gathered. So for this video, I'm just going to show for November and December 2025. So you can see the win rate of this model between November to December. You can see in November, it had an 86% win rate, and December it had a 100% win rate. So I'm going to share this. I'll put a link having this document, right below the video. You can check it out in the description. So you'll be able to open this and check out these charts. And I want you to appreciate how similar the setups look. The setups are very similar, very identical, very identical. So I want you to take note of that. I'll share this in the description, so don't get worried. Okay, so I'm going to now do an example, illustrate an example. Let me see. There's a trade I took on 26th. Let me open the journal. Yeah, so you can see this was the 26th of January. So you can see US 30, you can see price taking out the Asian high. On ES, which is S&P, you can see price taking out the Asian high. Then on Nasdaq, I was able to now, anticipate, a distribution, because now your Asian high has been taken out, so and previous highs have been taken out. So basically, I was anticipating a distribution, and price was trading above the midnight open, and you can see how price played out beautifully well. Some of the things I look out for: do we have SMT or alignment? Yes. Do we have a stop run? Yes. Do we have a visible draw liquidity? Yes. So these are the things that I'm trying to look out for, and you can see how the setup played out. So let's do this example together. So I'm going to open this backtesting tool. So let's begin now with US 30. So this is US 30, right? 5-minute time frame. So I'm going to mark out the start of the Asian session. So the Asian session starts at 8 p.m. New York time, right? That means I can now mark out, that is my Asian low. That is my Asian low. Asian session range low. Then this is my Asian high. So let me identify that. That is my Asian session high. Right. Let me just edit this a little. And then now we have the line and open, which is of course 3 a.m. So I'm going to mark it out there. That is 3 a.m. right? So let me just play the 2. And now this is my midnight open right there. That is my midnight open. Okay, that's my midnight open. So now you can also press, approaching the London open. You can see now price is now taking out the Asian high right before the London open. So that is something I identify. That is US 30. Then I go to US 500, which is ES. I do the same thing. So I mark out the Asian session. That is 8 p.m. to midnight. Then I mark out that's my Asian high. Asian session high. Then this is my Asian session low right there. Asian session low, stroke, relative equal lows, because that is now my anticipated drawn liquidity. Then this is my London open, 3 a.m. Let me just mark it out there. 3 a.m. And then this is my midnight open. Mark it out there. Yeah, so that's a midnight open there. Right there. So now we can now see price approaching the London open. So you can see price has taken out the Asian high, right? Just taking out the Asian high. So meaning if price takes out the Asian high, meaning we are anticipating a distribution, right? Because now this is a manipulation happening before the London open. So meaning we are anticipating a distribution, right? So with that aside, now let's get to, we have alignment, right? So we have a stop run on the US 30. We have price taking out the Asian high on US 500. So now meaning on NASDAQ, which is a US tech, here I'm anticipating a distribution, right? So let me now illustrate this. So Asian session from 8 p.m. to midnight. So it's from 8 p.m. to midnight, New York time. That's my Asian range, right? So that's my Asian session range high. And this is my Asian session range low. Asian session range low. Stroke relative equal lows. Then this is my midnight opening price. Right there. And then this is my London open. That is 3 a.m. Okay. Now let's let me stretch this. So now we can now see price approaching the London open. It takes out the Asian high. So that's a manipulation, we've confirmed. So now meaning we are anticipating a distribution, right? So now here what I'm looking out for a significant displacement, right? So you can see price, taking out, these previous highs. You see, it keeps on moving up, but it's taking out, previous highs. So what I want to see is a displacement, to the downside as my confirmation. Now that is a displacement to the downside. So here I'm going to mark out this inversion fair value gap. I can now place my sell limit right there, and then maybe put my stop loss right above there, then put my take profit maybe somewhere here. Here I didn't really execute, but let me just point out my execution right here. Yeah, so here you can see the actual execution. So basically I executed right here at this inversion here. So that is where my sell entry was made. So let me just play it back and we get a better feel. The displacement, then my sell limit somewhere there, stop loss at that high, then yeah. So I think this wraps up this model, and so I'll be sharing this with you, so you can take your time and go through these setups, and yeah, thank you for being patient and coming up to this part of the video, and I believe yeah, it's going to help you understand how I trade these markets. Otherwise, thank you so much, and I appreciate you my followers, for those who have been with me. I think since 2020, it's been quite a journey, and there's a lot we have to do, and I appreciate everyone. Otherwise, I wish everyone the best, and yeah, we meet. Take care.